Money and banking. We're going to go over 8 different questions and different things in this unit. We're going to go over what is money, the 3 different types of money, 6 characteristics of money, 10 different types of banking services, checking account, savings account. We're going to define some of these. What is a debit card, credit card, the 3 different types of money supply, and important legislation in banking. What is money? Money is anything that can be used as a medium of exchange, store of value, unit of counting. So this is the definition of money. Medium of exchange is where a seller must accept the item in exchange for a good or service. Storage of value means the money will have value and can be used at a later date, so you can use it next month, the next year. And then unit of accounting is a measure of value. It's kind of like the dollar or the yen. There are 3 different types of money. There's commodity money, representative money, and fiat money. Commodity money is where money has a value, has another use as another item, as well as the value as money. So cattle can be used for transportation, could be used for meat, and also can be used for money. Representative money is backed by or exchangeable for some other commodities such as gold or silver. So you can take your dollar and go to the bank and get gold or silver for it, or basically each dollar represents so much gold or silver in 4 notes. Fiat money means the money basically its value due to government decree or order. Government says it's worth $1, it's $1, and that's what we have currently today. There are 6 characteristics of money. There's money is durable, that means it's able to withstand the wear and tear being passed from person to person. Divisible means money can be divided up into smaller parts, so you have the dollar, you have the quarter, the dime, the nickel, and penny. Portable means money is carried around easily. Scarce means it's limited in numbers. Accepted means the sellers can take the item in exchange for goods and services. And stable in value means that money doesn't change rapidly, doesn't go up or down. It actually has a use as a store of value, so it's a stable in value. These are the 6 characteristics of money. Now, there are 10 different types of banking services I'm going to list out. There's probably a lot more. But there's checking accounts, there's storage of valuables, it's like a safe deposit box, an ATM or electronic banking where you can do banking over the phone, you can do it by phone, you can do it by computer. There's brokerage accounts, which is where you can buy and sell stocks. There's retirement accounts for your retirement savings, they're called IRAs, RICIAs. There are savings accounts where you put your money and just keep for a rainy day. There are CDs, these are time deposits, 6 months, 1 year, 3 year, 5 year times where you keep your money in for that time, it's higher interest rate. Personal loans, car loans, mortgages, which are for houses. You can have home loans or second mortgages. And then there's debits and credit cards. And these are the typical types of services for banking. There's a difference between debit and credit card. A credit card is a loan from a bank that charges higher rate of interest. It might be 18, 19, 30%. Has a limit anywhere from 500. You can get some that are a little bit less, but on average the minimum is 500. You go to 10,000. Sometimes you get more. It is not money. A credit card is not money. It is actual loan. Transaction goes on your credit report. If you don't pay it back, it's a negative ding on your credit report. A debit card is a card that allows you to withdraw money from a checking account by using a personal identification number. It does not create a loan, and it is considered money because you can use it just like cash. There are 3 different types of money supply, and each one is getting bigger and bigger. They all have basically the 4 things on it. So M1 is currency, coins, travelers' checks, and checking accounts. These are balances and numbers. It's the smallest amount, about $7 trillion. M2 is currency, coins, checking accounts, travelers' checks, savings accounts, money market mutual funds. Shouldn't be a comma there, it's money market mutual fund. M3 is currency, coins, checking accounts, travelers' checks, savings accounts, money market mutual funds, time deposits over $100,000. Sorry about that, it should be $100,000. I'll go ahead and make corrections on that. Important legislation in banking. We started the Federal Reserve Act of 1913. That's where we've got our system today, where we don't have thousands of banks making their own currencies, but there's one currency and controlling the money supply. Banking Act of 1933 created the Glass-Steagall Banking Act, which basically separated banks from stock brokerage houses. The Banking Act of 1935 created the FDIC, where money was insured so you didn't lose it if the bank went under. And you have the Depository Institution Deregulation Monetary Control Act of 1980 that deregulated banks. The savings accounts and regular banks could do checking accounts and savings accounts together, mortgages and loans. And then in 9 years, we had a savings and loan crisis, and many savings loans went bankrupt, and there were $250 billion in government bailouts. So this bailed out the savings and loan, the Financial Institutions Reform, Recovery, and Enforcement Act of 1989. Then in 1999, Graham meets Wiley Act of 1999 got rid of Glass-Steagall and basically set us up for the basic problems that we had in 2008, 2009 with banking and derivatives and bad money. And then we have the Federal Deposit Insurance Reform Act of 2005. That's where our money was actually insured up to $250,000 per account title. It used to be $100,000, now it's $200,000. There are lots of other banking regulations, but these are the biggest ones that we've had in the last few years, and I just wanted to go over those. So if you have any questions, feel free to ask in class. We'll be doing note cards on these. We'll have a little bit of activity, so hopefully you understand these. And if you have any questions, feel free to ask.